For more on how states are coping, I want to bring in Sheehan. She's the head of corporate governance for Calstrs, which is the $133 billion teachers retirement fund in California, the largest in the country, also the second largest public pension fund in California. And Ann, great to have you with us.
Good morning. Thank you for being here.
And if I can meld some of your career background into this singular question, because I know you worked at the Department of Energy in the Congressional Affairs Office. Calstrs owns shares in Chevron and Shell, as well as some other oil companies. Today, from a public pension fund perspective, what do you want to or expect to hear from executives from these oil companies?
Well, Betty, what we would like to hear is that they are taking the risk management issues that we as the shareholders want them to be responsible for, that they're planning for contingencies. While we want them to go out and find the oil and the natural resources, we want them to do it in a safe, responsible way. And so what we would be looking to hear from these executives who are testifying on Capitol Hill today is how they have taken that into account, how they have planned for the risk, and hopefully what would be the exceptions, like the accidents we had, and not the rule to their production. But they know there are risks involved, how they are addressing them, and if there is an accident like that, what they are doing to quickly repair it.
And knowing that, though, would you as a shareholder be prepared for lower returns in exchange for lower risk?
Well, certainly we always have to look at the risk-return profile as we plan for the retirement of the teachers of the state of California. And if there is a lower return in exchange for a lower risk, we would very possibly look at that to see, depending on what the profile of that company is and what they are doing.
Ethically, though, Ann, are you comfortable with oil company investments?
We are involved. We are a holder of a number of oil companies across our portfolio, and really with the demand from the American public and the world for oil, we're going to have to hold those companies. But as a large shareholder, we also are cognizant that we have to hold those companies accountable for how they handle their operations and how they are careful about their operations going forward. And we are very supportive of climate change regulations and the effort in Congress to move beyond an oil-based economy and to look at alternative sources. But until we get there, we are going to have to continue to hold these companies and keep their stock and keep their feet to the fire, and more importantly, the boards of those companies responsible for the management and the oversight of their operations.
Right, yeah, it's hard to be diversified and not hold some part of the energy industry, being that it's so large. And talking about regulation, what is going on in D.C., most important for you in this public pension fund?
Well, we are very hopeful that Congress can reach a conclusion on the financial regulatory reform package by the 4th of July. I know that's their goal. We've been involved from the very beginning in hoping that we can bring some confidence back to the market, and that we as large shareholders have confidence as investors in the market and as providers of capital. One of our biggest priorities are the corporate governance provisions, the ability of us as a large long-term shareholder in these companies across our portfolio, and we have about 7,000 companies in our portfolio, the ability to go in and make changes at the board level if we need to make those changes. And so we are very supportive of the corporate governance provisions, the access to the proxy that will enable us, the ability to have majority vote for shareholders, and also the say on pay provision that is in there. That is very important for us to hold those companies, their feet to the fire on these issues.
Okay, and really quickly, just tell me, I got to get to your state, though. People think California's in a mess. Munis are near bankruptcy. You're still issuing bonds. What gives? What's going on?
Well, we, like any other municipality and state, are having our fiscal problems. Our fiscal year begins July 1st, and I know the governor and the legislature are hard at work trying to come up with solutions as to how to move forward in the fiscal year. The state continues to issue bonds. We have had some problems with the subprime mortgage. California, like many of the other Southwest states, have been hit much harder than other states. But they do need to, we do need to continue to issue bonds.
We're going to have to leave it there.